All right, welcome everyone to this week's edition of the bi-weekly What's Happening at Gentian. So where we want to keep you updated on what's important, what's going on, keep you abreast of the election results, and replay all the commercials that you've been seeing for the past 3 months, because I know that's what you'd like. At any rate, one thing I'd like to do today is to go big, and I have a very, very important one today for myself, and that is 52 loves 14. 14 today is my Samantha. She is born 14 years ago this morning, about 5 or 6 o'clock in the morning. So I know 70 loves 52. Many of you have seen the poem, but I'd like to amend that also to now 52 can love 14 because of 70. So there's a lot of fun numbers. I like to work with numbers in a fun way, but I really appreciate her getting her up this morning, making her a fun breakfast. She's very self-determined. She's written about, she started 21 books so far, pretty far along on 1 or 2. She's a very unique girl. Many of you have seen her since she's been really little. Her favorite artist is James Taylor. So I have to say she's a fairly old soul for 14. So she's an 8th grader, just as an update, but this is my gratitude for today. It's just everything Samantha. We appreciate her. She's a ray of joy in our life. She's very smart and she keeps us on our toes. With that, how about Ken?
Hey, that's great, Chris. Happy birthday to your daughter. That's fantastic. So it's fun to watch her grow up over the years with you as well. So yeah, mine is a little different. Mine's technology based. Chris said you talk a lot about technology, and we're able to we've been 3D printing a little bit at our house and trying to get into that whole thing and just to understand technology a little bit more and having the kids do that. So I'm grateful for the opportunity to hopefully bring some fun into the house with a little bit of 3D printing that we're doing at the house right now. So
awesome. Thank you, Ken. How about Zach?
Thank you, Chris. Today, I'm grateful for the book Strength to Strength. We had the book club yesterday, and I am just unbelievably blessed for the wisdom and the crystallized intelligence given to me on a daily basis from people on the team, but also you as clients. And to take advantage of the fluid intelligence as long as I have it is what I heard from mostly everyone yesterday. And also just a quick note, I'm extremely grateful for veterans, with Veterans Day coming up this Friday as well.
Outstanding. Thank you very much. I appreciate that as well. How about Michael?
Thanks, Chris. Grateful for my girlfriend. She's, back home in Virginia right now, and we have 2 sick dogs out there. So she's been getting woken up in the middle of the night to take them out, and for her to take care of that so that I can be here and with everybody is really, really fantastic. So I really appreciate her.
Awesome, Michael. Thank you very much. Thank you very much. We were talking about Strength to Strength. We had a great book club yesterday. Wonderful program. Some very good things on fluid and crystal intelligence and some of the ideas of, the accomplishments of us normal people. Do they really make a difference? And the answer was obviously yes. It's what it is important to all of us. But what I notice is I'm getting older. I start to do less younger things. So it's really been years since I've done the hokey pokey. I've forgotten what it's all about. So as we move on today, I'd like to just start with something that we're seeing going on here, the election cycle. And many of you take a big breath. It's like, it's over. You're watching the results shows maybe now as well. But, the market loves certainty. It hates uncertainty. So when you go through things, you're going to see compounding on inflation, all the other things happening in the market as well. Really, it's a big issue with that you'll see the uncertainty of elections, uncertainty of earnings, uncertainty, right? There comes a point where you can't have much more uncertainty on things. Presently, it's war, inflation, as you go through and you hit this bottom and the market eventually is just like, okay. And from there, you start to see a bounce. It moves upwards. You begin to build hope. It's a natural progression. It's perspective I want to offer to you because I've seen this before. There've been a couple of things I've kind of been through now with 3 cycles in the market, 2 major cycles, but 3 cycles, and seeing that things that occur with slightly different names, but really rhyming and exact in how they operate. It's very interesting. So we're stronger and stronger, and the entire team gets to benefit from that perspective. From myself and Ken, who've been through a few, now Mike and Zach and Peter, who probably has been through 2 or 3 as well with me. So it's fantastic that we all get to share this between our young our older crystal intelligence or perspective and the younger fluid intelligence, which is really absorbing it all and also teaching us as well. So we really appreciate that around here, and hopefully we can offer some of that to you guys. Some of the insight right now I've just seen, just even looking at markets and looking at what's going on is. If anybody here has anybody who has or was working in the mortgage market, they're down 90% from last year. So essentially 1 in 10 mortgages are being applied for. We talked to one of our clients who's a great real estate agent down in Florida, and she said that things are very slow there right now, much slower than normal. And you'll find that price is going up, and then also that coinciding with the fact that interest rates are now above 7 It seems crazy, but I think the historical interest rate for a mortgage on a home in a 30 years around 6.3 or 4, at least in that range. So interesting to watch, interesting to see some of those things and listen. I ask a lot of people about their industries as well. Right now, if you're in the home building, home repair, home remodel industry, you are still booked to the hilt, right? If you're in the landscaping industry, it's the same thing. They're naming the price and you're saying yes. So really looking at some of the different ideas that we're looking at now is when might that all end? They all have different cycles. When might the market go up? Remember, in perspective, right now we're still in the endurance phase. The market, though, has a period of time that it starts to look 6 to 9 months ahead of what's happening right now. So by the time we literally list ourselves in recession, by the time we list all these things that have happened, we're often running toward the next leg of what they believe, and they're optimistic about the future. So I just wanted to offer a few of those to you guys as well. Today we're going to go with Mike's Minute, Zach's Facts, and we're going to have Ken's Corner. But what I'd like to do maybe is I'm going to mix up the order. No, I'm not going to do it. I was just going to mess with the guys here just a little bit. But what I'd like to start with maybe is let's go with Mike's Minute. Mike, what have you guys been seeing in research? We've done a ton of research lately. And once Mike goes through it, I'm going to tell you one thing as well we're going to do. Mike, what's going on?
Excellent. Thanks, Chris. And it's been about a month and a half since I've been able to be on here with everything that we've had going on. Peter and I were out at APFA. That's the Academy of Preferred Financial Advisors in Vegas a month ago. So that's why we weren't on at that point. And then obviously, we had the Purpose seminar in place of it last week here. So really excited to be back. But the things that we've been looking at a lot lately is what's going on in the macro environment and the kind of things that we can think about that can bring value to our clients, to all of you, and decisions that we can make on our end. So some of the big things are, when we have an opportunity to find something that is outperforming and has met a track record that we hold, we are very, what's the word? We are very diligent in sticking to our guidelines. And the big one is, we like to see a 10-year track record on some of these mutual funds before we make the decision to invest in them. And so there might have been something that we had been watching this entire time, and it might have been doing really well, but we just didn't really have the conviction with it until it met that mark. And recently one has. And so it's something that we're looking at, maybe a potential change in the portfolio. Chris will allude to it a little bit later, but lots of conversations, sitting down with, the portfolio managers themselves. Those are the kind of resources that we have and what we've been doing. And I actually have a meeting with a portfolio manager in about an hour here, just to get kind of like their feel of how they think the world's going to continue to turn and what we think is the best decisions for us and our clients. And in all of these conversations, they all really appreciate our due diligence, what we do, and how we stick to our plan overall. So, these changes, we don't waste, we make them efficiently. We make them when it's appropriate, but we don't make them hastily. So they're things that we continue to research and continue to look at. Thanks, Chris.
Thank you, Michael. I appreciate it. So Michael met somebody who was a professor at Johns Hopkins University. We got some interesting research from them as well, from the group at T. Rowe Price. We'll talk about it in person. I don't want to broadcast it, but it's kind of a very interesting to confirm what it is Michael's talking about and what we're doing. Let me give you a couple of facts. So there's a couple of things going on here, Zach, before you go into Zach's facts, and you're going to tell us what's going to happen in the future, which I appreciate and I smile at. But I want to give you guys two things that we're looking at right now. So we are very diligent about what we do. We're very disciplined as well. And that's why a lot of people enjoy working with us. Even people who are in the industry, wholesalers and others, say they love us because we actually walk our talk. But what's important about this, we've got two things, and I want to introduce a word to you: discretion. Most of you have discretion on your portfolios. That allows us to be able to make changes at the right time. We're probably going to execute discretion twice in the next month or two. We've had one fund that we've had, which is the Senior Floating Rate Bond Fund, and that fund has served its purpose. It's down a few percentage points, while the peer group of it are down 15 or 16 for the category we would have been in. So now we want to take that fact that we haven't dropped, move into fixed income in a time we think that it makes sense, but in probably a medium duration, 6.5 years in duration. I can go through some more technicals. I know a lot of you enjoy when I really get into the weeds and talk technical with some of the funds, but I won't do that. But with this discretion, it's just been something that's worked out really well for us. We were a little bit early on the floating rate fund. We had a slight upturn about a year ago, and then it kind of fell down again, but now we're seeing massive upturn, and this is why we bought the fund. Another one we're looking at as well, we're rebalancing a fund that's in your account called Low Core. It's up around 35, 40% for those of you that have it. So when the market's down, you've got a fund up that's up tremendously, I should say. So doing some rebalancing with that will happen as well. And then the third one that's going to happen, and that's not Discretion, but the second one that will happen with Discretion is, as Mike alluded to, we've had a fund that we've owned forever, Algebra Spectra. Many of you know it. Many of you have been with it for a very long time. But they did start a fund, a focus fund, about 10 years ago. It now has this 10-year track record, and we don't want to invest in something unless it's got that 10-year track record. It's less expensive by a significant amount, by almost 0.5%. And also the performance is slightly betters that of, actually betters it pretty decently, the Spectra fund. It also has less components in it as well and more focused on their best ideas. So these are two funds we're going to move to that will benefit you, we find, but we'll use both of those with discretion. The third one we'll do during our normal rebalances as well when it comes to the low core fund. I want to give you some of those. There's a bunch of technical things we go through and we look at and think of all the time. But one thing I want to let you know we've been working on is a word called kidifying. Kidifying. So kidifying is making things simple so that children can understand it. And I've realized as I get older and I have more crystal intelligence versus fluid intelligence, kidifying helps me understand it, especially when I'm explaining it to you. So what I find is we're going to take the very complex and really attempt to make it simple. The way we're doing that as well is also to reduce anxiety. There's two things we can do. We can produce anxiety, which most of the world does, or reduce it. We want to reduce it. So two things we're working on right now is reducing anxiety and kidifying. Kidifying is bringing you really very, very complex things, but in reporting them to you in a simple manner. If you want more of what's behind it, let us know. If it takes a lot of time, you can ask Ken or Zach. I mess with you. With that, how about Zach's facts? What's going on, Zach? What should we know?
Thank you, Chris. I'm still waiting for the Chris Doty dictionary to come out with all the different words that you combine and create. But as always, we'll go through the different markets, kind of where they're at for the year, a few different facts that you may not hear anywhere else, and then also just a few different items when it comes to interest rates and mortgage, like Chris touched on as well. But if we're going through the markets, the Dow Jones Industrial Average down about 8.7% on the year, up 13% in the last month. The S&P 500 still about 19.6% on the year, but 6.13 on the month. NASDAQ, which is weighted more towards technology, 50% of it is in technology, that is still temporarily down 32%, and about 1.82% increase in the last month. The Russell 2000, Ryan shared this with me this morning on our team, that it's down 19.4% on the year, but it is the only category that's actually up over the last 6 months. So the reason why we asset allocate and continue to rebalance is seen right there as well. There's still the disparity between the Russell 2000 or small size companies growth and also the small size companies value. The growth temporarily down 25% on the year, up 5.2 in the last month. And then the value side temporarily down 13%, 8.56 increase in the last month. So it's also just another stark reason why we have growth and value in the portfolio across different indexes. On the emerging market side, still temporarily down 26%, and the international large cap temporarily down 24%, but a 5% increase in the last month as well. Just a few items to discuss on the fixed income side of things, as Chris and Mike alluded to, why we're so focused on bonds and their different duration and the maturities, is that if we would have ignored that and had long duration or long maturity bonds, they could be temporarily down more than 30% on the year. So what we think as the safe place, or what the world thinks is a safe place, temporarily down 30%, that's a very big deal. So one thing that we're starting to see is CD rates are getting towards the 3 to 4% range. And then mortgage rates, it's the highest rate hike since, and the highest it's been since 2008. As Chris mentioned, the 30-year fixed mortgage up over 7%, the 15-year 6.07. And just for a little bit of perspective, only 1 year ago, the average 30-year rate in 2021 was 2.96%. And as we were kind of going through some of those numbers, just like the stock market, everyone tries to make different predictions on the way rates are going to move, which you think would be a little bit more simple than all the different variables of the stock market and what companies are going to do. In 2019, economists thought that the rates would go from 4.5% to up over 5.5%. And it did the exact opposite for 3 years and actually went below 3%. So just nice to see the different perspective as we go through history of all the different forecasting that occurs. And yet most of the time people are wrong with the directions that it goes. So with that, I'll pass it back to you, Chris.
Thank you, Zach. Super interesting. I appreciate that. There's a lot of perspective in there as well. So let me give you guys a big picture as well. One reason that Zach's talking about the Russell 2000 and small cap is often small caps lead us out of a correction. They tend to be one of the first things to turn around. They can right the ship quicker than a big company can. So it's interesting to watch sometimes, and there's no, it's not always true, but you'll find that often small cap lead us out of corrections. So it's interesting to hear the last 6 months that they're up. Of course, we follow it, but I wanted to make sure that you knew. One other word that kind of goes along with what Zach is saying, as rates become higher, you start to see something called disintermediation. Disintermediation. Look it up. It's a fun word. You can tease other people with it. But it's essentially when rates get higher, things people used to buy for dividends at 2 and 3% now don't seem as appealing when they fluctuate tremendously. And they can go into something that doesn't fluctuate for 3 to 4%. So people were, when everything was at 0.0 for your CDs, very, very, very low, people went into things that had a lot more risk because they wanted the yield. Disintermediation also says, or will tell us now, that oftentimes people will go back to those things that are much safer with that kind of yield. Just giving you a little bit of an idea about some things that are going on. There's a whole bunch of other fun big words that we like to use from time to time, but when I said kitifying, I won't use it. It's basically people are going to find safer things with the same rate. So I'll leave it at that one as well. Ken, how about yourself? What's going on in the planning faction? There's a ton of stuff that people are doing. We've been talking about. I know you went to see Ed's slot as well. Anything that we should be paying attention to in the planning?
Yeah, there's a few things to be paying attention to this morning here and going forward for this year, the remainder of this year and also into next year. So QCDs, qualified charitable distributions, time is running out for those. A lot of you have already done them or plan to do them. But if you've been thinking about, sending some of your IRA money to a charity, this is the time to be thinking about that. That window is closing down on us right now. So just a friendly reminder about qualified charitable distributions, if that is something that you are interested in. The other piece that we've been noticing and finding more people doing is Roth 401ks. It's been a thing for 10 or 15 years now. Some 401ks have it, some don't. It kind of depends on which company you work for and if they've adopted it. But there's 5-year clocks that are associated with Roth 401ks of when you first put the money in versus when you take the money out. Same with Roth IRAs. There's a 5-year clock of when we start it and versus when we take it out. So we're tracking this for you as well. We're trying to, as long as we understand what you're doing, which we usually have a good handle on your planning and what you're doing. But if you have a Roth 401k, bring it up to us. Let us know when you started it. If you snuck a percentage or two in there on your rebalance, let us know that, because that really does have some effect on the planning that we think about for you and all the rules that are associated with it. So that's a good piece there. Inheriting money, we're starting to see a lot more of that right now. And there's different ways to inherit money. There's different types of accounts to inherit. There's so many rules, everybody, on this. It's actually very complicated. And so, there's stretch IRAs. We talk about that a lot as far as IRAs go. There's income with respect to the decedent. That's also something we have to pay attention to. A lot of this is tax related, so we're going to, rely on your tax professional to help us out on some of this, but we'll bring up the ideas for you on questions to ask. Non-qualified annuities, pretty common thing that the generation that is passing money and inheriting that money, there's usually some sort of an annuity involved of some sort. Those have different tax rules than other accounts do. So again, just be aware of these things. We're here to help you step by step. We'll try to kidify it for you, like Chris said, but we'll try to make it as easy as possible for you. So just talk with us. The last piece I'd like to bring up before I hand it back over to Chris is Medicare planning. So Medicare planning is interesting because there's a 2-year lag on everything. And when you look at this piece for Medicare planning, a lot of you know about Part B. And, this year, I think it was $170-ish dollars, per month. I heard next year it's going down to 160-ish per month. Now, one thing to keep in mind is that, last year we had, capital gains year. So on personal investment accounts, capital gains were at an all-time high. And that can come into play for the Medicare planning and how much you might pay for the Part B. There's something called IRMAA, IRMAA, IRMAA. That basically is the surcharge. If our income goes past a threshold, we may have to pay more for the Medicare Part B. So I just wanted to bring that up to your attention, not to get caught off guard with that piece, but that may come into play because of 2021 being a larger capital gain year. You know, remember 2020, there was no RMDs, and then those came back in. So Medicare premiums jump around a little bit based on our incomes and what's happening with the rules that are presented to us. So I believe that gets adjusted right now. I think people find out about that here in November timeframe of what's going to happen for the next year going forward. So just wanted to bring that piece to your attention. We do get a few questions on that one, so hopefully we can get ahead of that one for you guys.
Awesome. Thank you, Ken. I appreciate that. A couple of things as well that are going on that are big right now is open enrollment is going on for a lot of you in those Medicare programs and your Medicare supplements, if you will. So that's another big portion of what people are paying attention to. I believe as you find this, there's about 174,000 Medicare programs and choices that you need to make and can make. And we've got some resources to help you look at those as well. If you have any questions, let us know. But I know that that's a big time of year for many of you as well as you bring those decisions to us, and we'll often defer to the experts because those plans are rapidly changing. There's some good things happening in a few different categories for 2025 as well. A couple of things I want to do and kind of hopping back before we get to the things you should pay attention to, Gentian here, and Julie will wrap up with that. But there's a couple of things I wanted to say. If we look at this and you really find the bigger picture of what's gone on here, the pandemic, a war, inflation, a massive amount of money given, election, a slowdown, the correction that occurred in 2020. I mean, you can go through it, supply chain issues, people issues, that's really kind of an amazing thing. But I think if you kind of want to bring it down to a Yogi Berra quote, it's kind of comes down to nobody knows nothing. It's as simple as that when we're kidifying it. Nobody knows nothing. I think there are no absolutes. Everybody's pretty certain about what's going to happen until something different happens. So as I look at that, you have to be super careful about the certainty with which you predict something's going to happen. Oh, this is going to happen. Whenever somebody's more certain, you should be less sure. Okay, so I want to make that statement. When somebody's extremely certain, you should be careful and potentially be less sure of their answer. Nick Murray had a great thing for us. He's a great teacher of ours. And it comes down to something, all this stuff that's been utterly unpredictable is absolutely nuts, from the Fed to everything I've just said, elections to interest rates. But it comes down to about 5 things I want to tell you. Number one, and you should know this, these are fundamentals. This is like Mr. Lombardi speaking it, but is the economy cannot be forecast, period. The market can't be timed, period. Therefore, the correct time to buy equities or stocks let's call it the stock of great companies, is for the long run is whenever you have the money. By the same logic, the correct time to sell is when you need the money. Everything else is commentary. Talk about kidifying. I've just kidified the business of behavioral finance in 5 lines. Why do I do that? Because I want to simplify it to reduce anxiety. There's a lot of stuff happening. A lot of stuff in that pot is being stirred. A lot of things are out there, a lot of predictions. And toward the end, and this may not be the end, but when you're long-term in the bull market, you're going to hear statements like, this will never recover. Things are going to get much worse. The predictions are that we won't have any return for 10 years, that companies will fail. When you see somebody like Mark Zuckerberg at Meta, lay off 10,000 people, that just evokes all the worst possibilities. Well, he made a really bad choice moving from Facebook to all of us working on virtual reality in a very quick fashion. He was very early, hired too many people, made a bad decision for his company, admitted it today. So you're going to see these kind of things. You're going to see Elon Musk taking over Twitter. You're going to see, all sorts of things happening that you might not, know or wonder. But I do want to make sure it comes back to this too shall pass. That is my quote. Historically, this too shall pass. Once again, we nor anyone can tell you when, but it will. And we'll look back upon this time. Something I said to a young client yesterday, he said, well, all my clients are, really concerned, all this and that, and I can't really put any money to work because everybody I know is so concerned. That doesn't make me comfortable putting money to work. I said, no, I fully understand that. I fully understand that. But let me give you some advice for the next time this happens. Pay attention to how things are right now, because this is the time you should put money to work, not searching for other things. I say, if insurance was to go on sale 25%, would you buy it? Well, insurance doesn't go on sale. Yeah, but fortunately the market does. So at any rate, we had these kind of concepts. We had these statements. I just wanted to share these with you because these are real. These are what everybody's feeling. I wanted to put you in that scenario as well. And to your younger, let's say 30 and below, they've never experienced a correction this long or like this, or 80% of the NASDAQ stocks down, actually 80% of the stocks in the NASDAQ were down almost 50% at one point in time. They've been obliterated, and cryptocurrencies, all those little kind of flying companies, a lot of them believe that this market will never go up. This is their first major lesson they needed. They now need reassurance from you that doing the right thing, having a proper portfolio, and being in it for planning for the long term is what's right. So I want to give that to you. I've been in the business a long time. I've talked to a lot of you. I don't always talk so frank, but I've realized the value in what we do is to be straightforward with you in times like these. With that, there's some very important, fun, exciting things to be happening here at Gentian. And then I'll close with a nice little funny, humorous thing. But why don't I bring Julie in? And she's a wonderful, smiling face, quiet in the background, always there, always reliable. We love her to death. Julie, what do we need to do, or what do we need to pay attention to at Gentian right now?
Gosh, there's a lot happening here in November. So thank you, Chris. Good to be with everybody this morning. Thank you for sharing your time. As mentioned, Veterans Day is this Friday, November 11th. So we are very appreciative of all the veterans who have served and continue to serve our country. Next Tuesday, November 15th, we will get together again for more discussion on the book Strength to Strength. So there's still time to get the book and join us next Tuesday at 11 a.m. It is a virtual book club, so please register for that. Wednesday, November 16th, we will have limited office availability as we focus on professional development and, planning for 2023. So we will get back to you with any emails or calls after we wrap up that meeting. Then Tuesday, November 22nd, we will get together again for more discussion on Strength to Strength. November 24th and 25th, our offices will be closed in observance of Thanksgiving. So we hope that you enjoy the time with your family and friends, as we will do with ours. So we will be back to work on that following Monday. Tuesday, November 29th, we'll wrap up our discussion of Strength to Strength. So make sure to register for that, 11 a.m. again. Wednesday, November 30th will be our Ladies and Gentian, and we're going to wrap up 2022 with a fun crafting idea. So make sure to register for that by November 17th so that we can make sure to get you all the material for our crafting exercise. And looking forward to December, we will have a private screening with our Gentian clients of the movie Elf. That will be at 11 a.m. at the Marcus North Shore. So make sure to RSVP for that by the 18th. So again, that's December 3rd. So all these events you can register and RSVP directly from our weekly bulletin or our website. So that's all I have for today, Chris. So I'll pass it back to you.
Awesome. Thank you very much. I appreciate that, Julie. I've got it with Veterans Day coming. I had one of my veteran clients who's a big golfer. He was talking to me just the other week, and he said, hey, let's go out and play sometimes. But do you know why World War II veterans or World War I veterans dislike golf? And I said, no, why is that? It was kind of an odd question because they always end up in the bunker. So take that for what it's worth. It's a veteran's joke. I appreciate that one, but I'll leave you with one other one that's a little bit better. And it was kind of an interesting one. I'm not sure if you heard this, but I think one of the police stations right here in the area was robbed and the toilet was taken. Now the police have nothing to go on. So you can give that to your kids as well. At any rate, I wanted to end it with a little bit of happiness. There's a lot going on. There's a lot going on in the economy and markets. We appreciate all your questions. We appreciate your time. Most of all, we appreciate your patience. And we'll continue to work on the timeless. We'll take away all the clutter. If you have any questions about certain things, always let us know. But what we appreciate about you is the consistency with which you're willing to ask us the tough questions. You're willing to let us help you and your family. So with that, we'll continue to do what we do for you. We appreciate that. Have a wonderful time as you're approaching the Thanksgiving holidays. Make sure you're giving thanks and gratitude. If you want to do something interesting, go around the table at Thanksgiving and ask everybody before they eat to ask who they're grateful for at the table and why. So it's kind of a fun one. but maybe you should do that across the table. It's a fun exercise I've heard of as well. With that, I want to thank you all for your attention on this biweekly update. And we look forward to talking to you again in 2 weeks. I hope you have a wonderful holiday, and we will talk to you just before December. Take care. Thank you from Gentian here. I should say this. We help to plan, live, and give. We appreciate that. But again, have a wonderful time of Thanksgiving.